The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, the natural gas. It's making a head and shoulders pattern. We have a left shoulder, a right ahead, and a beautiful right shoulder, and that's probably what what's happening with the natural gas. We could go either way from here, from the pennant, but right now the short-term picture in the natural gas certainly looks like it's heading to the downside. I wanted to. We have our new chairman of the Federal Reserve Board speaking right now, and she just alerted us to the fact that we do not have any problems in our economy, that there's nothing wrong with what's going on, and all I wanted to do is to remind you, please turn off. I don't have my den sound on, so I don't understand what that means. I hope this is working okay. I'm going to put a chart in from 2007, May of 2007, from Forbes magazine, and the title of it was "Bernanke Believes the Housing Mess Was Contained." That was May of 2007, and it basically said that he was there wasn't really no problems in the thing, and he was most comprehensive of the subject of the subprime mortgage issue. So there was really no problems. And the new Secretary, Yellen, came in and just told us that there were no problems on the horizon in the stock market because they could see no bubble because the valuations were very fairly priced and that the asset evaluations were going up as possible. Okay, now this is what I'm going to do now is to go into the commodities. We're going to have our good friend Rich Anderson coming on at the half hour, and Rich is going to be talking to us about some of the things that we've been talking about in commodities, through the years. But folks, we have something really unusual happening in the metals market, something that I have not seen in a long time. I mean, I'm going back a long time. In fact, I tried to go back and find out, when was the last time we saw something like this, and it's in the silver and the gold market. We're having a tremendous rally in the gold market after breaking through that 1275 level, and as you can see from this chart, the silver market has went down and made a double bottom from the low on October the 14th. We took that out by just a little bit, and as you can see from the red line, which is the gold chart, gold has had a tremendous rally. It's rallied well over $35 an ounce in a matter of a few hours, whereas silver was not able to do that. This is highly unusual because if you look at this chart, the correlation between gold and silver is incredibly high. It's in the neighborhood of 90%. So that's what we're looking at it, and so we'll see what happens, from these levels in the gold and silver. This is the first ABCD correction that we've had on the short side on gold, so we'll notice if that's going to be anything of any stretch of anybody's imagination here from here. If we take a look at the gold chart on the weekly basis, as you can see. Now, there's still a possibility that we could be heading down towards the $1,100 and 70 per dollar per ounce level one more time, because there is that potential. Gold has to get above 1360, and then it would be turning into a bull market. But it's a good $50-some away, and whether it's going to do that or not, certainly remains to be seen. But gold has been in a bear market since September of 2011, and it's been, just drifting down, and more it looks bearish and bearish. Folks, these commodities do not look good. I mean, if you look at any of the commodities that we usually follow, you're going to see that most of them, are in tremendous downtrends. And that's a very, very ominous thing for the economy, because that means that demand for this stuff is usually, going south, and that's not a good thing to see happen. We're going to take a quick look at the crude oil market here, and you'll see that we have a 61% retracement that could be coming in around the $91 per barrel level, which is not too far away. And we've been down in that since September, so we've been down 3 months straight down. So it's tremendously oversold. Some of the components of the market, like heating oil and other things like that, are actually forming much stronger patterns that you can look at easier than you can on crude oil, because crude oil has been coming down so hard that it's had virtually no buyers at all. However, if we look at one of the components of crude oil, which is the heating oil, which is very, very strong seasonal this time of the year, you'll never guess why, because winter comes at the time of this time of the year. In fact, the first day of winter will be December 22nd, usually is anyway. And what we'll do is we'll take a look at this, and you'll see that we just formed a huge bullish Gartley. This was provided to us by our good friend Mr. Z in the room from the city of brotherly love. He was on the air, if you remember, last week, talking about the potential bottom in heating oil at around 283 per gallon, 283 per gallon. And it's already jumped 10 cents a gallon, which is a huge amount of money, folks. In anybody's stretch in imagination, it's well over $4,000. So that's in a matter of 4 or 5 days. So the man walks his talk. He knows what he's doing. So that's what we're looking at. So I'm going to have to go off the air now, because President Obama is speaking, and I'm sure you'll all want to go on in. Oh, Tom O'Brien just said no. It's in my contract that I have to keep talking no matter who is speaking. So I imagine I'll be here by myself, talking to myself with the president speaking. So we'll just move on. And it's recorded. See, so you can go back and record it, and you'll be able to see, what's going on in the markets. I wanted to switch over here for just a second and just bring up the stock market one more time, to thank Janet Yellen for getting us all bullish up in here. And we'll see. It certainly is a very bullish pattern where stocks are not overvalued or anything. And the fact that they've been going up since the bottom of March of 2009, and we have this 3 drive to a top pattern forming, and we have a potential double top forming or something like that. But she assured us that there's no problems in the stock market. I guess the margin debt is going to be repudiated by the the Federal Reserve Board, so nobody will have any problems, to that. So we'll see what happens, and then go on for that. Okay. All right. We've seen this New York Stock Exchange. I wanted to show it to you on a shorter term time frame, because we're completing another big ABCD here. We made the big ABCD down here last Friday, if you remember. Then we had the huge rally. We had the pullback to the 61% retracement. That occurred yesterday, and now what we have happening is we have a completion of the big ABCD pattern up in this area here of what we have going on now. So evidently the market's going to be bullish for the remainder of 2013, 14, 15, and 16. However, I am seeing a 3% pullback sometime in the spring of 2016. I'm not sure when. I'm working on some real important work using some new material that I've just got, and I will get back with you on that. But we are looking for a 3% correction sometime in September of 2003. My guess it'll probably start around the end of March, maybe the day after the end of March. That's when it could possibly happen. We'll have to double check that. I'm going to get with some of my colleagues to see if, in fact, that is the time that we're looking at what we're doing. Now, one of the things that the chairman today talked about was the fact that the situation in China was, getting under control. They were working with their banking system, and everything looked really good there. And so I took a chart of the Chinese stock market using the ETF, and it shows this tremendously bullish head and shoulders pattern in a reverse way. And if anybody can find something bullish in this, I would certainly like to get their opinion on this. This is a classic head and shoulders pattern that looks going. And if you go back farther, if you go back as far as if we extend this out to a weekly chart, just a second, I have to update it here because it's been a while since I've looked at a weekly chart on the stock market for China. You'll see that we have been in a anything but a bull market in China since 2007. Remember, the rest of the world went straight up, or most of the rest of the world, and you can see what happened to China. The high was made, way back in August of 07, and the market is still having downtrends all the way through here. So it doesn't look like that China will, be any help to us, on the way up if we get this. Now, we're going to have a break here relatively soon, and then right after that break, we're going to be talking to our good friend Rich Anderson. But right now, we've got the Dow Jones up about 34 points. We have the New York composite is down just a little bit. Excuse me, that is the NASDAQ is down just a little bit. The S&P is up 5, and that's about all we're seeing here. It's the volume is relatively mild, and we have bonds up about 0.5 point, and we have crude oil is finally unchanged.
It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks, we've got a phone number here. If you want to call in, 877-927-6648. And I wanted to talk a little bit about December corn, known in the trade as Christmas corn. It has made a 1.618 expansion of the low from 2012 to where we are right now. It stopped exactly at $4.15 a bushel. We've had a tiny bit of a rally here. The market, as you can see, has been incredibly bearish, as have all commodities over the past year. Copper, crude oil, you can just name them. There's been a few rallies along the way, but most of them have been down, and that's usually a very negative thing. But with the Federal Reserve pumping in money, like Dr. Yellen said, there's really no problems here. We're in control here, and we don't see any reason why anything should change. We're raising asset values to promote wealth in the community. I'm sure that helps in the ghettos where people have a lot of ETFs and stuff. And as a matter of fact, I heard that President Obama was going to put in some trading monitors in some of the ghettos so that the folks could get some more money from their IRAs and stuff by doing some day trading and doing some position trading in gold and silver and copper and some of those things. I'm sure that'll work out really well also. Now, about another few minutes here, we're going to have a real expert on, Rich Anderson from Anderson Capital Management, and he's going to talk to us about the grain markets. But this is one of them that has been under a great deal of pressure. This affects the ethanol market quite a bit, and it has been one of the things that has pushed the market in corn down quite a bit. We owe a lot of gratitude to our friend Mr. Z in the room, because when we were up around 527 and we had bought some corn and it was working pretty good, that, he said, be careful because if it goes below that 55.10 per bushel, we'll probably go to 4.25. And by golly, he was wrong. It went to 4.15, so he missed it by 10 cents. And I'm gonna next time he's on the calls in, I'm gonna have to chastise him about that because we like to have accuracy in this area here. So your chance of going on to the Federal Reserve Board, I'm afraid, in Philadelphia, John, have just diminished because you missed corn by less than 1% over a period of 9 months. Work on your accuracy, my friend. We value accuracy here at TFNN. So the next one we're going to take a look at before we come to our break with Mr. Anderson is we're going to take a look at soybeans, one of the few things that has been in an up market. We've had a pretty good correction to the downside, and now we've made a modified head and shoulders pattern in the March soybeans, and we've had a pretty good rally. And as you can see, we've had some lower tops, we've had lower bottoms, so this market is still in a downtrend. So it's probably best to look for a place to, enter a short position because it shouldn't be too hard to see if it's going to go a little bit, lower from this level. We did have a beautiful butterfly pattern form in August, but we pointed out that to you before I was gone for the month of August for the birth of our little grandson, who's 3 months old now. He's doing fine. He's told us that he's almost ready for his first trade, but he waited for the 6-month birthday window so that he wouldn't have any problems with long-term capital gains. So this is why we are looking at soybeans today, is because this is the only one of the few that is actually going higher. Wheat is going lower. Rice is going lower. Corn is going lower. Everything is there's just more supplies than we ever dreamed of. Last year at this time, that was not the case. Things changed. And that's the reason why we have commodity markets, is that you can speculate on whether there's going to be a good crop or whether there's going to be a bad crop. And you don't have to be a farmer. You don't have to put all that money into implements and capitalization and insurance and seed and feed and land costs and all that. You can just buy a contract at the Chicago Board of Trade, and you'll own 5,000 bushels of soybeans, and that'll give you the knowledge that you need. Paul Samuelson, the Nobel Prize economist from Harvard, said that if you would short one contract of soybeans, you would learn more about that than you will in 1 year of graduate school of business. And I believe that to be the case because it'll tell you all about two things. One, supply and demand, and the other thing it'll tell you about yourself, but most importantly, it'll tell you about money management because these things move crazy. I'm going to take a little break here. Back with Rich Anderson.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I think we have our good friend, Mr. Rich Anderson of Anderson Capital Management on the line. Are you there, Rich?
Hi, Larry. How you doing?
Oh, Rich, I'm doing good, my friend. I'm doing good. You know, just old age creeping up on me, but, you know, as long as I can creep faster away from it than it can from me, I guess I'm okay.
Yeah, that's for sure, isn't it?
Yeah. Hey, listen, tell me, what is the most important thing you think is happening right now in the commodity markets?
Well, you know, the old rule way back when was don't fight the Fed, and the Fed is certainly trying to juice things up. There's no doubt about that. One of the questions they asked Dr. Yellen this morning, has there ever been a time when the balance sheet has been that big in the Federal Reserve? And she was about to mention some other foreign countries and how they had big balance sheets, and they said, no, we want to only know about the Federal Reserve. You know, she did admit there are risks to what's being done, and it's just a matter of time before we'll have to pay the piper. But in the meantime, you don't fight the Fed. So many of these markets are tied to, you know, trade policies, et cetera. You know, the corn market is tied to the ethanol, which the government can come out at any moment and say, well, we're only going to mandate X amount of ethanol. But the bottom line is, with the price of corn down where it's at, ethanol usage is apparently quite high, because we've been crushing corn like crazy to create ethanol, and yet the stocks of ethanol haven't built. So the best fix for oversupply is lower prices, and we're getting these lower prices. The hog farmer hasn't had this kind of profitability in a long, long time. The poultry producer hasn't had this kind of profitability in a long, long time. I'm kind of, and there's a huge, giant short in the corn, and a pretty decent short in the wheat, and these markets are all about money flow. We just got done yesterday with the Goldman Sachs, by prospectus rolls at a certain time, the month prior to expiration. For these corn, it would have been in November, and for these cattle, it would have been November, these silver for that matter. But, once that selling's out of the way, the farmers are cleaning up their harvest. And once you bring the grain to town, if you put it in the bin, you're not going to move that till spring. Because, why would you put it in the bin and then take it out? And if you've taken it to town, usually the elevator will give you about 10 days, and then after that you have to pay storage. So once you start paying storage, you've already paid, 10 or 12 cents for X number of months. You're not going to sell that grain. So any excess grain that's going to be sold is going to be sold in the next 5 to 10 days, and then after that, they're going to have to bid up to get this stuff out of the farmer's hands. I mean, the cash basis firmed up a nickel in the last 2 days. So while there's a huge supply of corn, there's such a short on the board that at some point, if we take out a previous day's high, they'll be heading for the hills. And if we take out Monday's high, we'll definitely be heading for the hills. And the sellers will just not be there to accommodate all the buyers. I'm thinking the opportunity right now, Larry, is in the meats. We've had some disease issues where the baby pigs will get sick and die. It was big in Oklahoma over the summer, and now it's moved back to North Carolina, where we have the highest concentration of sows and huge pork production back in North Carolina. Mm-hmm. And that's making holes in the supply. And while the hogs are under pressure here today, I expect in the near future we'll see another hole in the supplies, and you'll see these, at least the front month hogs, start to strengthen up versus the rest of the months.
Rich, what's your feeling on gasoline? We have had a gasoline under $3 a gallon here in Tucson just recently, and we rallied about 20 cents a gallon here in the futures market recently. I know you deal with petroleum suppliers and stuff for hedging and stuff. What's your comments over there? Well,
the rebob, which is unleaded gasoline, has firmed up a bunch. The macro picture is we have a technology change that has occurred with this fracking and horizontal drilling that's allowed us to tap more oil and more gas than ever before, and that's why this country is going to be energy independent within the next couple of years. So that extra supply that's coming on, the only thing that's limiting it is how it's being moved. There aren't any pipelines to really make it easy to move it, so a lot of it's being moved by truck and rail. But we're going to have, this is like a giant tax cut for this country for the next 5 to 10 years, probably 15 years. We're going to have relatively cheap energy. Natural gas is a fraction of the price in the world market. But there'll be times when rebob has a lot to do with the cracking. The oil companies are, when you take a barrel of oil, which is 42 gallons, and you heat it and crack it, you get diesel fuel, gasoline, and then the very top of the barrel is jet fuel. And the very bottom of the barrel is the crud that's kind of used for asphalt. And so at this time of the year, they're cracking for more heating oil, and that's why you've got a slight shortage of rebob, and it's caused a bounce there. Now, usually by December 7th through the 10th, the energy companies will know exactly how much more heating oil they need to produce to get through the cold weather season, and they'll start changing their crack, and then that's when you'll start to see less heating oil being produced and more gasoline or rebob, and there'll be a change in the supply and demand, and thus change the price. I think one of the biggest focuses on a macro level was Draghi's cutting interest rates because of a fear of deflation Dr. Copper is the best indicator of whether we've got a good economy or a bad one that I know of, and it hasn't been going up lately. Because Dr. Copper has a PhD in economics.
That's for sure. Let's go a little closer to home here out in South Dakota. I'm going to put up a wheat chart because this thing has been under pressure here for the last 5 or 6 weeks, and we've been in a downtrend for well over a year. Is there any hope to the wheat market, Rich, or what?
Well, we were in a downtrend because we were 20 to 50 cents overpriced versus the world market. Now what you're seeing is that we're priced with the world market. Egypt is tendering for wheat. Our crop conditions are good for next spring, but we have the wheat that we have. The last report showed the world market with more production than what they thought. But yeah, I think Egypt, we sold wheat to Brazil just yesterday. Egypt's in to buy wheat, and I think that's going to put a floor under us for the moment. And just like corn, there's a fairly large short on the board. And so you don't need much of a rally. Then all of a sudden these shorts are going to be chased out, and you can see a 20-cent rally in wheat in pretty decent order.
Rich, would you explain to our listeners, because you're familiar with this, explain to what you mean when you see there's shorts on the board in corn. Explain to our listeners what that means.
Well, the hedge funds, the large funds, have to report their positions. And so the CFTC reports, every Friday whether the commercials are long or short a position in the grain market or cotton or whatever, and who the shorts are. And the shorts are the funds and the large speculators, and the longs are the commercials. Usually when the longs are the commercials and they get to a certain level, you find a floor, because the shorts don't have any more powder any more bullets to push the market down, and the commercials have bought and continue to buy because they're using it. So all of a sudden the shorts have to get out, and they start buying their contracts back, and that's where you get the short covering rallies that can be very dramatic.
Rich, are there any ETFs for like corn and soybeans and wheat that you have any confidence in as far as tracking the market and giving good values for people that don't want to, open a commodity account and be exposed to margin and risk and stuff like that?
Well, the ETFs were developed because back in the old days when I was like at Smith Barney, there were maybe 300 out of the 12,000 brokers that did any futures, and they maybe had 500 or 600 futures licenses out of the 12,000 brokers. Mm-hmm. So it was very limited who could play. So they developed the ETFs. The biggest one that has decent volume is the GLD for gold. I believe there's a corn one. I think it's CO. I'm not an expert in ETFs. I don't use them, but I believe the corn one there's an ETF in every market. I would just look at which ones have the most volume. I think the corn one is just CORN. But I'm not familiar with them. But I know GLD has tracks fairly well with the market and has huge volume. So you don't want to get in anything. I don't care whether it's a futures or an ETF that has low volume and it's illiquid, because you're just asking for trouble.
Rich, I understand that there's been some changes at the CFTC about folks getting licenses for the commodity markets. Have you had any experience with that or heard any more about it?
No. The biggest thing that's going on at CFTC is the head is leaving, but the position limits that they're going to impose on banks and on large hedge funds, that's the thing that may rattle the markets the most in the near future.
What are the odds of whether Gary Gensler is going to go to J.P. Morgan or go back to Goldman Sachs? Do we have any idea yet?
Well, it's one or the other, or he'll be a private consultant and get a paycheck from both.
Oh, there you go. It usually works pretty good that way. I know that for a fact.
It's just unbelievable how these guys can regulate somebody, and then when they retire, they get big paychecks, whether it's going back to work for them or as a consultant.
I think
it's quite a racket.
I think that's what they call payback. Let's go back to history a little bit. About 35 years ago, do you remember Secretary of Agriculture Earl Butz?
Yep.
and all the orders. He traded all the time against his positions there, being Secretary of the Agriculture. They used to fill him on the floor of the stock of the Merc there that day whenever there was a hogs or cattle report. If he was selling, you could bet the farm that it was going to be down, and if he was buying, you could bet the farm it was going up. He had an uncanny ability of knowing whether that report was bullish or bearish. I guess he used a Ouija board or was psychic.
Well, the secretaries of the, and the Federal Reserve President and the President, get these reports ahead of day. They get them a day ahead of time.
Mm-hmm. Would that be helpful in your trading, Rich?
Yeah, that would make hindsight trading a lot easier, let me tell you.
And if people don't believe that stuff doesn't go on, they should watch Trading Places at least 2 or 3 times for sure.
It's, some people would explain it away and say, well, they have macro computer models and they're able to calculate things. And it is true that some of the grain firms use the same satellite data that the USDA and other people use, although USDA is using a survey. And from that satellite data, you can tell within a bushel what the yield is going to be by the heat signature of that particular crop.
I remember stories of that going back 20 years ago from my good friend Jay Cross, who you knew, and Jay was one of the people that started Commodity Corporation. Well, Rich, I don't want to keep any more.
And by the way, November beans goes off the board today, and in the real world, when something goes off the board, if it's going off for more than the next month, that's because somebody's actually willing to pay that much for it because they need it.
Yeah.
And I think the January beans, will have an interesting need for, if you're going to be bearish on the beans, you want to be bearish in the May or July when we've got the Brazilian crop coming. Between now and when the Brazilian crop comes, and it'll take a while to load those boats out, so you're really talking April, May. January beans could be an interesting situation. Unattached from the rest of the market. And the November tells you that there's real demand now because it's going off the board higher than the Jan, and the Jan is going to be an interesting situation.
Yeah, they need cash beans. Gosh, Rich, you can remember back when we traded beans being $4 or $5 was a high price. If they ever got to $6, that was a big bull market.
I know that people didn't think they could ever go above $4.
Yeah, and then we heard back in 1972 beans in the teens when they hit $12.90 in July beans that year during expiration, and it took 30 years to get above that, and now we trade above $12 all the time.
Right. The other thing to be aware of is that next week is option expiration in the grains, and so the guys that are delta neutral, so they're short puts and they're short 1 futures for each 2 puts every time, and they might have 1,000 puts on. Every time it goes down a penny or two, they have to sell more futures, and then all of a sudden there aren't any more to sell, and then they have to start buying them back as the market goes up. They always play that game in the last week to 10 days before option expiration, so that's something I'm watching for.
Listen, thanks for joining us, my friend. We'll have you on in a couple of weeks, okay?
All right, keep your eye on the hogs.
You bet. God bless
Bye-bye.
you, Rich.
Thanks.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
We're back with our friend from Danny in Atlanta, Georgia. Are you there, Danny?
I'm here, Larry. Thanks for having Rich on. It's always an education.
Yeah, he's a real gentleman. What can I do for you, my friend?
Well, yesterday you were very bearish on gold, and what's your strategy now for taking a position longer term? You're going to look for more strength, or?
I want to see what happens, Danny, because of what's happened with silver. The fact that silver could not move along with it, and the way gold came out of here, it could have been just a short covering rally because it looks so bearish going below, that fib point at 1275. We just completed that ABCD up there at 1290. And that was a place to, nibble at the short side. So I want to wait a day or two. But, Danny, I'm going to put in to Tiger TV the long-term gold-silver index chart. And, buddy, that looks real bearish. It's going to be hard for gold to be bullish with this thing looking so bearish, is my opinion. And I just want to wait a few days, my friend.
Honestly, I thought gold would have made a bigger move in response to Yellen's testimony today.
Yeah.
We had a nice move off to 618 yesterday. We're up about $20, but
but that just completed an ABCD and nothing really happened. So you got to wait a couple days, my friend.
Okay, great. Thank you, Larry.
Thank you for calling in. And we got our final caller from Greeley, Colorado. Doug, are you there?
I am.
What can I do for you, my friend?
Larry, I'd like to get your opinion about sugar. I don't have access to the futures or contracts, but I'm looking at the SGG ETF for sugar. It looks like it's pulled back to the 0.618 retracement.
SGG?
Yes.
SGG. Okay, let's take a look at this. All I know is that my doctor says sugar is not good for you, but, you know, I'm not so sure that he knows what he's doing because he's always drinking Coca-Cola when I go into his office. So what am I supposed to think about the doctor, right? Okay, you can see that we've had a pretty big drop in sugar over the past 3 years, and now we're pulling back to a 61% retracement, Doug. If you wanted to buy it here at this $59.95 level, it's a relatively low-risk buy. You've got to put your stop below, I'd say around 56 or something like that, but it is making a really nice retracement after a pretty good run. That's on a weekly basis, too, because, you know, that means you come down 5 weeks, so it's got a pretty good chance of bouncing from here.
Okay. All right. Well, that was the way it was looking to me as well. I was curious what you're thinking that 56 would be pretty much the downside risk on that.
I would do that. If we take a look at it on the daily here, just give me a second, and we'll hopefully get this pulled up before we get knocked off the air. And I've got a refresh maximum, not just daily. And then we'll get a better look at it. Oh, yeah, this is exactly where it is. Hopefully we'll get this into Tiger TV in time. Boy, you're spot on. You're right there, my friend. You're within about 10 cents or so in that. It's coming down. It's got a lot of gaps, but that's just because it doesn't trade overnight. But that's a good pattern. You've had a head and shoulders pattern on the bottom. You had the big run-up, and you want to buy that first 61% retracement. That's you know, you're trading with the trend now because you've got higher bottoms. I don't see anything better than that.
Okay. All right.
Okay.
Well, good enough. I appreciate your opinion on that. Thank you very much.
Well, you know, you pay for what you get, my friend.
Well, I value your opinion nonetheless.
No, I appreciate that. Thank you very much, Doug. Okay,
thanks,
folks.
Larry. Have a good day.
You bet. Okay, we got the Dow Jones up today pretty strongly. Looks like about 30 points. We got the composite down 3, and we got the end of the show. So live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.